NetApp is a company I really like for a couple reasons. One being it's done pretty well over the last 5 years. You can see it's up 100%. It also pays a dividend better than the S&P 500. So over the last 5 years, this is a company that has outperformed the S&P 500, right? Since 2014, late 2014, it's up pretty dramatically as well, up about 400%-ish, a little bit less. But over that same time frame, the S&P 500 is only up 240%. So this is a company, right, that is currently outperformed the S&P 500, which is good, right? It also is cheaper than the S&P 500. PE about 22.5, forward PE about 17. That is very good, right? S&P 500 PE is about 27, forward PE is about 23. So through and through, this is a company that has outperformed the S&P 500, is valued under S&P 500 standard, and is also a tech company, right? They specialize in cloud stuff, right? So I like that. I like that industry. I like it quite a bit. I mean, you can read all of this sort of stuff. I'm not going to dive super deep into the nitty gritty of what they do in this particular video. However, I like the industry they're in. Is it perfect? No, I'd like if they were a little bit more on the AI side of things. However, still cloud and storage is very, very important. It's not like we're going to need less of that. And I think they're decently positioned for a future, right? I think it's an above average industry. It's certainly better than a lot of industries, right? Than most, right? So this is a company, like I said, cheap, good value, good performance. So this is one of those where you're kind of trying to balance the risk reward ratio. And I think this, in my opinion, is a pretty solid candidate for good reward, but also decent mitigated risk. So the one thing that isn't super great is revenue hasn't been as good, right? It's increased over the last, since 2022. It's expected to since in 2025, but it's still not great. However, earnings has still been growing. It's grown pretty significantly, right? It's grown 6%, 16%, and then we're expected to grow 13% on top of it. So this is a company that is becoming more efficient in terms of, right, generating a profit, but I would still like to see revenue continue to grow, and that's probably why you're seeing this valuation a little bit lower. However, even if you can just marginally increase that revenue, right, we can get, instead of closer to 7%, we can get to 10. This stock should do really well. It's valued at a company that's expected to not do as good as the average company, certainly not the average tech company, but historically, just in terms of historically with, the share, the price of the company, the value of the share, it has outperformed S&P 500. Right, we can look a little bit more at the history of the PE, right? These recently, so it has had a decent run up, at least in the sense of the PE, and it has over this last year as well. We can see over the last year, it's up the chart always loads wrong. 35%. So, and we do see that reflected in the value, right? I mean, but even then, it's not crazy. Earlier this year, it was 26. Maybe forward PE was a little bit lower, but even then. So it looks like forward PE has been somewhere between 12 and 18. Right now we're at 17, right? For forward PE, for normal PE, we're kind of right in that same level as well, at least if we're excluding 2023. So this is within its normal value. It's closer to peaks than a lot of these tech companies are. A lot of them were hitting crazy highs. Bro, load the chart right. Yeah, a lot of them were hitting kind of crazier highs kind of around June, July, and have tapered off somewhat dramatically. And this one, it's a lot closer to its all-time high, but it's like I said, it's really not that expensive anyways. If we take a look at some of the ratings on it, Schwab likes this company. They like it quite a bit. They give it B, top 25% of all stocks over the next year. They think it's going to be, so the top, 25% of all stocks performing. I don't do one-year predictions. I do long-term outlooks. I do think this is a good balance, though. I like this as hey, you want more tech, more exposure to tech, but you don't necessarily want high PE. This is one of those good ones, in my opinion. So if there's any stock I could see, hey, if they just start making even, 5% better on revenue than people think, which it seems like historically they do beat by a little bit. If we do a little bit better on revenue than we think, right, this thing could do very well over the next year or two, right, better than average. But I'm not necessarily predicting. I don't know. I don't do short-term predictions. That's just not my thing. I do, hey, this company is solid performance, but I do like it as a risk mitigation and diversification to a stock that has decent value associated with it. Morningstar does not rate this stock, so we can't look at it. I would guess its economic moat would be more on the narrow side. The one disadvantage is it's not a super large company at 25 billion, and there isn't anything incredibly proprietary about it other than, some of the software they do around it. But it's nothing like, oh, we're the only one in the world that can do it, which is ideal for a large moat. So it's somewhere in the narrow. I hate even the Morningstar rating. They often do none, narrow, wide. I don't like that because that implies like a 0, 3, 10. But I would give it probably a 4, maybe a 3. So narrow would probably be what I'd be looking at. There's the ESG-weighted issue score. I still don't really know how to read any of this, and it's kind of somewhat a controversial topic, so I try not to dive too much into it in my videos, right? Historically beating, that's good. Analysts really don't have anything crazy to say in it. Schwab is more bullish than most. We can see, looks like 7 or so of the analysts say buy, so a third are saying buy or strong buy. Then basically the rest are saying hold, one dude saying underperform. But yeah, I like the stock as a long-term hold. Of course, this is not investment advice. I do particularly own this stock. I don't own a bunch, but I do own some just because I like the value of it. I like the industry it's in. And I think, it should perform pretty fine. And the dividend's fine as well, too. So for all these balances, is this going to be the best performing stock I have in my portfolio? Very likely not. But I think it's a good exposure to tech, good exposure to a good industry. And who knows? There's always that chance, because this is a small company, that they could really grow. There's a lot of room to grow as well. So I think for me personally, this almost hits the bullseye of low risk, high reward. But of course, anything can happen with any particular company. So that's why I just wanted to make a video on this specific one. If you enjoyed, I'd appreciate if you left a like, subscribe if you are new. I've noticed whenever anyone subscribes to my channel, often I get a boost in views. YouTube's like, hey, people enjoy this guy, and then they recommend it out more. So it means a lot to me. But anyways, I appreciate all of you for watching, and I hope to catch you in the next video.